Richard Harris, yes, he's with us, Chief Executive, Port Shelter Investment, joining in. Thank you so much for taking time out. And I guess that the US presidential elections continue to remain the key talking point. This is the first time that Trump and Harris are meeting in person. What do you think it is that at least the investor community wants to hear when it comes to policies?
Well, I'm not sure we're going to get policies at all from either of the candidates. And it sort of follows what happened in the UK election. It's very dangerous to come up with a policy because what ends up is you end up being criticized on them in some way. I think Wall Street generally favors Trump because it's quite clear that Kamala Harris is going to bring in higher taxation for richer people. And that, of course, is a bit of an anathema to the rich people in Wall Street and maybe Silicon Valley. On the other hand, in the debate, which I've just been watching, she's made a pretty good fight of it and had Trump on the back foot quite a bit. And, of course, American elections are not won by the rich necessarily. They're run by the mass of the people. And if the mass of the people move in her direction, we could see an America move slightly more towards the left, which would mean that, yes, we will see more taxes, and it will be slightly negative for the market. But I think at the end of the day, the market's got other issues to think about.
Richard, I'll just like to draw your attention to a comment from Ms. Harris, which is that if Democrats come back, or if they stay in power, let me rephrase that, they could increase corporate taxes, which the Republicans did when Mr. Trump was the president. Could that be the biggest, moving part in terms of whether tax would move, and if taxes they go higher for the U.S. corporate sector, that automatically could have impact on markets, earnings, and everything?
Yes, it is likely to have an impact on the margin, but I think the really key factor, if you look at markets at the moment, are interest rates and the direction of interest rates. And, your last speaker was just saying a moment ago, oil prices are coming down. The market still has a lot of momentum in it, talking about the global markets. And I think that if we see the interest rate factor come in, at least a bias on interest rates falling, then that's going to support markets. And I think that markets always have different narratives. You're talking a little bit about the corporate tax narrative. I think the interest rate narrative is the dominant one, and that will almost certainly supersede any concerns that Wall Street may have about corporate taxation.
Cyrus, what to your mind could be the lay of the land when I say Wall Street, if Democrats, they hold back, if they voted back, or if Republicans, they come back? Because historically we've seen that Republicans mean there is going to be more focused activity around sanctions against China. If Democrats, they come to power, there could be focus on clean energy. That's how markets have evolved in the past.
I think that's a broad thought, but in reality, I suspect that we're not going to see too much change from the Biden administration. I think that they're going to keep the kind of sanctions we have on China at the moment. The problem with the Republicans is that Trump really is an unknown quantity. We don't really know what he's going to do. We don't know if he's going to put more sanctions on. We don't know if he's going to pull out of Ukraine. In that sense, he's much more of a risk to the market because of the uncertainty factor that can come in and the law of unforeseen consequences that could come in by Trump making a completely random decision out of the blue. So the bottom line is, I think that interest rates will hold sway. They'll be the key factor. If the Democrats come in, it'll likely be business as usual, maybe with some adjustments on the taxation, but that'll take a little while. If Trump comes in, we are for a very, very uncertain time. Markets are fragile. They're going to be supported by falling interest rates. But his uncertainties of policies are likely to make it more fragile.
Richard, so good having you on the show with those initial thoughts. Thanks as always for taking the time out and speaking with us today.
My pleasure.
Okay.
If you like this video, then like, share and subscribe to ET Now.